Good evening, guys. Welcome to the FNO show with Bereez. What a day it was today to trade options, I tell you. Uh, I am mostly an option seller, so today's market wasn't the ideal one, I would say. Nifty opened gap up but it immediately started correcting. I entered 18100, 18400 strangle right out of the open, and for first 40-45 minutes I was in decent bit of profit, but after that the market started moving a little towards downside, and I had to adjust my position. I had to bring my call down from 18400 to 18350 to gain some more credit to compensate for the put side pressure. But again, after taking some support at 18200 to 20 levels, market kept moving down. I had to again make some adjustments. I had to add 18400 call again to get some credit. Now I have 18100 put, 18350 and 18400 calls. I also had to buy some hedges to get margin benefit and increase my position size, since I needed that much credit to compensate for that kind of risk that I was taking. Then, as the down move continued, I had to book loss in my 18100 puts. I had to move them down to 17950, where premium was very low. But at this point, I was clear that downside risk is clearly more than the upside risk. So I was okay with having a downside bias in my position. As the day progressed, we sort of saw market consolidating within a range all the way till 2:30 in the afternoon. At that point in time, I was sitting on 18,000 put and 18,400 call. I risked off my 18,350 call when it had given a decent decay and moved it to 18,400, just to be sure that I won't be caught off in a sudden rally like we saw the day before. That was my idea. Now at 2:30, as the large candle formed, I I realized that we might see a continued down move, and I just booked out of my position at market. I do know that I took quite a bit of slippages there, but I guess in hindsight I was right in taking that exit. I still ended the day on flat, kind of 0.25% profit, but a lot of that will go in charges, as I have made some 7-8 adjustments to my position. But what happened was, I mean, it's a nightmare for an option seller. There is no easy way of saying it. Nifty crashed almost 50-60 points from 230 to 250. From there, it rallied up in three candles, covering almost 40 points, and then again it fell down 50-60 points. So if someone was holding positions there, they would have taken a loss in put. They would have rolled the calls down. They would have rolled the puts down. Then they would have taken a loss on call side. Again, they would have adjusted the position. At the end of the day, again the whole thing would have collapsed on itself. So if your day was like that, please let me know in the comments in the YouTube. I would really like to know how you adjusted the positions, because I knew I wouldn't have able to. I would have booked some ludicrous amount of loss on my position instead of minor profit. On days like this, I'm happy with break even. I As long as my capital is protected, I'm completely fine with that. Moving now, surprising thing, generally people say bank nifty has more risk than nifty. Well, today might have been an exception. Now, agreed, bank nifty made an intraday range of some 250 to 300 points. Saying that, the 41,800 straddle decayed some 80-85 points intraday despite the move, and despite India VIX doing its own business. 80 points on a single lot of straddle, that equals to around 2000 rupees per straddle. So on a large capital, that is a no brainer, very easy trade. Of course, this is all hindsight, but bank nifty did hold its opening candles high and low all the way to the close, and it pretty much closed in that range only. So if anyone came across that trade, if anyone took 41,800 straddle or even a strangle at a wider level, I'm sure there would have been plenty of decay to be captured there as well, provided you did not adjust too aggressively throughout the day. during the moves that we saw from low to high and then again high to low. So that's bank nifty. I don't very actively trade bank nifty because margin requirement there is definitely higher, and from what I have heard, slippages in options are also higher as you move away from at the money. So I'm keeping an eye on it. If there are any good opportunities, definitely I will take. But as of now, I don't see any. I do have a positional short trade running. It's a spread, so don't get too excited about it. I have sold 41,800 call and bought 41,900 call. So it's a spread. It's roughly even spread. So uh, I think it's 3,000 rupees max profit and 4,000 rupees max loss or something like that. So it's very even spread, and it's purely positional. I do not wish to adjust it too much. If it expires in the money, it expires in the money. If I make money on it, I make money on it. It's as simple as that. I just want to see how bank nifty reacts from these high levels. Coming to fin nifty was kind of in between what nifty and bank nifty did. Bank Nifty stayed pretty much flat throughout the day. Nifty corrected. Fin Nifty corrected a bit. It recovered quite a bit, and then again it fell by a lot. So uh, it's a good thing today wasn't Fin Nifty expiry. Otherwise, that would have been a nightmare trade to manage again throughout this move. Another interesting trade that I want to track, and this is now clearly hypothetical paper trading situation. If you see, Bank Nifty is outperforming Fin Nifty by quite a bit. Only reason is PSU banks, I think, hold much larger weightage in Bank Nifty, and of course, Fin Nifty has a lot of NBFCs which are not doing very well. Bajaj Twins, especially, correcting quite a bit in 2 days. Other stocks such as ICICI Prudential and all also correcting. So Fin Nifty definitely does not have strength. Now, I kind of want to test my view that their movement will converge some point in this expiry. So the outperformance of Bank Nifty will not continue, and underperformance of Fin Nifty will not continue either. So I am tracking a trade of short Bank Nifty November future and long Fin Nifty November future. Another reason to do this as a paper trade, other than the fact that I want to see how the index moves, is Fin Nifty Fin Nifty futures do not have liquidity at all. At one point during the day, I saw Fin Nifty futures showing some 8 rupees spread. For a script that has monthly expiry as well, 8 rupees spread is quite a bit. For Fin Nifty lot size, that is 2,000 rupees spread in and out of your position. That is quite a bit for a correlation related position where the profit itself usually is not quite a lot, and your profitability depends heavily on the kind of liquidity that you get and the kind of execution that you get. So this is my index view for now. Tomorrow will be an interesting expiry because we have taken a sort of a rejection from higher levels. We broke yesterday's high, but then we did not sustain above it. We are still sort of in a 2-day range, so we did not break yesterday's or this week's low as well. So it will be interesting to see. I'm hoping this range to hold of some 18,075 to 18,300. If we somehow hold this range, it will not be too difficult to trade the expiry. My only concern still remains is the level of India VIX. Now India VIX, though it rose today by 2.25%, it's still pretty low, so premiums are not very attractive. Now, given the fact that we are seeing large intraday moves in all the indices and even some stocks, the premiums are not really sufficient for the kind of risk that you are taking. Every time you try to take additional credit from the opposite side of the side that is in trouble, you see that either you have to move really, really close to where the market is, or you have to take really little credit. So we'll see how the premiums play out. Of course, this show will continue tomorrow as well, where I will update you all with the trades I take, or if the market is really bad, the trades I, or just my blank screen for the lack of better word. So I hope you all had a decent day today, and all the best for tomorrow's expiry. Bye bye.